Hello traders, Gary Wagner here, 11:30 in Honolulu, 5:30 in New York on Thursday, 17th day of August, 2023, and this is the Daily Report for Gold and Silver. The financial markets continue to react to the release of the FOMC meeting minutes from last month with a negative bias in both U.S. equities as well as gold pricing. Both spot and forex move lower today, with spot gold currently fixed at $1,888.34, and gold futures basis the most active December contract down $9.40 and fixed at $1,918.90. Gold pricing did continue to decline today, but there are technical indications that we could be nearing a potential bottom or at least a bounce, with gold returning to upside momentum. This first chart is a daily candlestick chart of gold futures, and what is interesting is that we have had 9 consecutive days of lower lows, lower highs, as well as lower closes. And that brings up a gentleman named Tom DeMark, who created a series of DeMark indicators. One of them is the count of 9. Simply put, it states that if a particular stock or commodity trades with 9 consecutive lower lows and lower closes, or 9 consecutive rises or higher closes, it will be oversold or overbought. In the condition of gold, we have seen 9 consecutive down days with lower lows, lower highs, lower closes, which means that we could be entering an oversold scenario. Add to that, when I look at our Fibonacci retracement, the low today matches approximately $1,915. Gold traded to a low of $1,914, just below that price point. As you know, I have been speaking about an area we need to watch, which is between 1900, which I have labeled as major support. Simply put, it is based upon this low that came in mid-June. And we also have the 200-day moving average close at hand at $1,907, which to me means that although we've seen a tremendous price decline in gold from roughly $1,980 to today's low of $1,914, that we could be nearing some sort of potential bottom. That is something we want to pay close attention to and act upon if confirmed. Silver bucked the trend by having a substantial rise of almost a full percentage point, gaining 0.91%, with the most active September contract up 20 cents and fixed at $22.74. While we did see gold move lower today, the other precious metals moved in the opposite direction. Platinum, palladium, and silver all closed higher on the day. On this daily chart, we can see it defined as this green body candlestick, which certainly differs from recent activity. I draw your attention to the fact that when silver really gained momentum in the current correction, we had these large-bodied candlesticks. That waned to very, very small bodies, which simply means that the differential between the open and closing price was slight, although they made consistent lower lows. Today is absolutely different and could be signaling a reversal in trend has begun. This next chart is a silver chart, although each candlestick represents a half a day in trading, or 720 minutes. I've also included the MACD, which is the moving average convergence divergence indicator, and on a half a day chart, the MACD clearly shows the market moving into oversold territory and having the signal line cross above the MACD line in trading today. I do believe that the half-day chart is giving us a valid and clear signal. The dollar continues to show strength with a fractional gain today. The dollar index is currently fixed at 103.33, up 0.011%. Although the dollar did move higher today based on yesterday's close, I draw your attention to today's candlestick, which is a small doji candle with a small red body. In a doji, color is not as important as the size of the body, but it isn't always a true indicator of market reversal, which means that when a doji does appear, it requires confirmation before acting upon it, as you can see here when we got 2 dojis in a row and the market returned to its upside trend. This has been Gary Wagner wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.